Hello, in this video we'll be looking at control accounts. Now in big organizations, many ledgers are kept for debtors and creditors. Because of the large number of these ledgers that are kept, errors may be difficult to locate. Now to reduce the amount of time used in locating errors, it is better to use a system whereby each ledger can be balanced independently. Now what is control account? Control account is the memorandum account, the balance of which reflect the aggregate balance of many subsidiary books or many related subsidiary accounts which are part of double entry system. Now this account is credited and debited as the total amount of all transactions which are standout and individual debtors and creditors ledgers. Now note, control accounts are not necessarily part of the double entry system, but perform the function of trial balance to a particular ledger. Now, what are the advantages of control accounts? 1. Control accounts helps in locating errors. 2. They save time. 3. They can be used to determine missing figures. 4. Fraud will be difficult. 5. Homogeneous accounts can be grouped together. Now, control accounts can, however, be divided into two, which are total debtors control accounts or sales ledger control account. 2. Total creditors control account or purchases ledger control accounts. Now, in total debtors control account, which is same as sales ledger control account, in the debit side you have the date in both debit side and credit side. Then in the debit side you still have the January balance brought forward. You have the credit sales, you have the debit note issued, interest charge on overdue accounts, and you have the dishonored check, you have the discount disallowed, and carriage outward. Then the credit side, you have January, the same year, or February or March, whatever month you are given. You have cash from customers, that's the first cash you receive, and the check from customers, then the return inwards, and you have the bad debt, you have the discount allowed, you have the credit note issued, and bills receivable, then contra entry set off. Then when you deduct from each other, you have your balance carried down. Then in the purchase ledger control account, you same as the total creditors control accounts. You have the same as the debit and credit side with a T format, and you have the dates that you are given. Then in the debit side, you have January cash from cash to suppliers, that's the cash you give out to suppliers. You have the check to suppliers, return outward. You have the credit note received, and then you have the discounts received. You have also contra entry set off, and you have bills payable. Then in the debit side, you have your the same ones or that you're giving January balance brought down. You also have your credit purchases, you have your discounts received, and then you have your cash refunds. Now then from there you get your balance carried down. Now note, contra entry, this occurs when the supplier is seen as a customer. So when your supplier is a customer, then you have what is called contra entry. Next video we'll be looking at or treating past questions on JAMB and SSCE to help you prepare better for your coming exams.